Ladies and gentlemen, welcome back to another video. I wanted to make a quick one just to briefly talk about what I want to do with the coming week with a potential market downturn. And before we get started, if you like this kind of content, please consider subscribing. That way you don't miss any videos in the future. I've been documenting me selling puts and calls to try to make some extra income and see if I can make that work. And if that sounds like something you would like to follow along and see if I can do it, please consider subscribing. That way you don't miss any future videos. And folks, we are in a market downturn. How do I know it? Well, it's not from the headlines. It's not from my own analysis. It's simply from me asking Copilot, aka just an AI, if the stock market is crashing. And it said, it looks like the stock market is experiencing a significant downturn right now. Major indexes have all seen substantial declines recently, yada yada. But what do we like about market downturns? Well, if you have some extra capital and you're willing to purchase more shares of specific stock or security, selling puts is optimum during a downturn like this because the premiums become more and more enticing at a strike price that they might not have if the stock was raising. But I'm actually going to look at start doing the opposite because why not? And that is selling a call on Sofi. Because I've been selling puts on Sofi, I've been acquiring more shares because they've been assigned, and I'm now at 3,500 shares of Sofi. And I have some more puts I sold that are currently open for Sofi as well. And with earnings coming up, the premiums post earnings on selling a call are actually really enticing. If we go ahead and take a look at trading Sofi options and I go to sell a call, and if we look at post earnings at January 31st, if I look at the $17 strike call that I can sell, $33 in premium. And what I can do is I can just sell one at a time. And then if Sofi starts to recover over this week, I can sell another one and maybe go even farther in strike price, maybe 18. Because the thing about earnings is, what if they share something groundbreaking? We have record numbers and members and a huge earnings beat, then the price of Sofi might go higher than the strike price that I sell a call at. And then what happens is I miss all of the difference in gains from the strike price to the current price of Sofi if I end up having to sell my shares. And the same can happen if before earnings the stock starts to recover. The value of these calls will be more and more, and therefore I would get more premium if I were to sell calls as it recovers. So that's why I want to sell maybe one or two at a time and just kind of play it safe, get some premium that way. And, if it does become a sign post earnings, I'm okay with it because a $17 strike or an $18 strike, that's huge capital appreciation for me. And then I can continue to start selling more puts on it and just do the wheel with Sofi, which is what I truly intend to do. And before we get back into the video, if you like this kind of content, you want to support the channel and get something beneficial, I am selling my spreadsheet template that I use to track all of the options that I sell. It helps me keep myself accountable and it lets me keep track of what the actual profits are. So if you want to go check it out, it'll be in the description below. And thank you so much for even considering it. And if we go to the flip side, if I want to sell another put because I'm a madman on Sofi, check out the premium the other way, a $12 strike, so $2 below the current share price, $29 in premium from this one put alone, which is wild. If I want to do something more recent, maybe this Friday, I can even sell a $13.50 for $18 or $13 for $9 in premium. And for fun, I even asked Copilot if I should sell some puts on Sofi, and it said selling puts on Sofi can be a strategy to consider, especially if you believe the stock price might stay the same or go up. However, it's important to be aware of the risks involved, including the current performance options activity and market conditions. But what they don't mention is if I'm okay with owning, then selling puts would be a good way to acquire more shares at a lower price because you're gaining premium from doing so. So that's what I'm looking at tomorrow. I might sell one call and just kind of ease myself into selling calls. And then on the flip side, maybe I look at selling a pretty low strike put on Sofi, and I'll keep my eyes on other stocks I've been selling puts on lately just to see what's going on with them. And then if they look enticing, maybe sell one on something else as well. But of course, I'll keep you guys posted, and I hope to see you in a future video when we go to talk about what I end up doing.